Sebastien, where are you seeing opportunities in the market then? And for those especially who are trying to inflation-proof their portfolio?
Sure. So inflation is everywhere, and in the markets, there are ways to protect your portfolio from that and to benefit from it. So historically, if you look into the research, what you see is that the best way to benefit from inflation is to buy the things that are causing the inflation. So it sounds very simple, but you can implement that. Right now, it's commodities, mostly energies, base metals, agricultural products. So these things are worth having a place in your portfolio. And if you're a very sophisticated investor and you can play with derivatives, I mean, it's easy to have direct exposure. But if not, in being overweight the Canadian stock market, where you have a lot of exposure to energy, to materials, that makes a lot of sense. So even though the S&P TSX has been under some pressure recently, the energy sector, that's still a good place to be. The materials sector, that's still a good place to be. And you could have some outperformance even to the downside by holding these. You technically also, historically, you can put some other kind of more exotic strategies like trend following. So there are many things that you can do in there. On the flip side, right now, what we're seeing is that we're seeing tech stocks, which were the darlings of the last move higher, they're getting beat pretty bad. That doesn't mean that tech is dead at all. I mean, the technology stocks that we have right now, those are some of the biggest companies in the world, the Facebooks, the Google, the Apple. So these stocks at some point, when we do find a bottom, they will still be interesting. But I would tend to focus more on real world, real economy assets like commodities to benefit from the environment.
Yeah, I want to talk about those FANG stocks, right? The Facebooks, the Googles, the Amazons, because we have seen a massive decline. Do you think that it's worth a second look right now, or are valuations still very frothy?
Valuations are still elevated, but it's hard to value these companies that have no debt, that have a strong growth in earnings. They have a large moat. So it's natural for them to be pricey. When we look at the recent moves, of course, now we've seen these names deflate quite a bit in 2022. So that makes them more attractive now than they were at the beginning of the year. But again, if you have a very long-term horizon, I mean, it's probably right now buying some of these things in 2, 3, 4 years, you'll say, well, I bought them at a very interesting price, but there's no guarantee that in 2 weeks, 2 months, 6 months, they'll be necessarily higher.
Sebastien, are you starting to see signs that people are paying more attention to fundamentals? And I ask this because it feels like fundamentals were sort of thrown out the door, right? Like massive run up. Nobody seemed to care that, there are stocks that are trading at 300, 400 times PE. Are you seeing some maybe rational thinking in the markets now?
Yeah, fundamentals are starting to matter again, and that's a very, very good thing. So when money is basically free, so when it means that when interest rates are at near to zero from central banks, then fundamentals, I mean, who cares? There's just so much liquidity in there, and you buy what's hot and you just follow the trend. In 2020, 2021, everyone was looking at, all right, the strong recovery, probably a long business cycle. So let's just pile up into the names that should lead the way there. But when we have rising rates from central banks, when we have the yield curve that gets flatter like right now, well, then you need to be a bit more careful with what you have to your portfolios. And then you need to think about, all right, so what's the prospects for the US consumer, the Canadian consumer, business investments? And then you need to be a bit more peculiar about what you pick in your portfolio. So yes, technicals, the fundamentals are getting more important right now, and that's a very, very good thing.
Sebastien, we have about a minute to the break. There's still a debate right now that it's a stock picker's market. And there's lots and lots of people that just hold the broad index, whether it's a mutual fund or ETF. For those who do that, what do they have to consider? What are your thoughts on that?
Well, if you hold broad indices and you don't go into stock picking, I mean, relative valuation from country to country or large cap versus small cap, that's what you need to look at. Like, for example, right now, the TSX is trading at a 12 times forward earnings compared to about 17 times in the US. In the US, the price earning is above the 10-year average, so the average of the last 10 years. In Canada, we are below. So these relative valuations explain a lot. Like the NASDAQ is still, I mean, it's been beat down quite a bit recently. We're down 30% plus, but its valuation is still above the 10-year average, while global ex-US stocks were below the long-term average. So valuation matters in the long run.